Hey everybody, Brian here from quantlabs.net. Got Paul Cottrell, Dr. Paul Cottrell, introducing his current topic. Go ahead, Paul.
Hi, thank you everyone for joining. This topic is going to be about a research paper that my team and myself are writing, and it's about artificial intelligence, so cognitive architecture. The the actual word that we use is neurogenesis for this particular project. So what I want to talk about is the roadmap for artificial intelligence in finance. What the current state of my software is at, what the research paper that we're doing, and what the next step after this research paper. So Poseidon is a software that I used for trading. And it has three pillars. It has artificial intelligence, it has what I call hypercube modeling, and it has a virtual reality component to it. The the bulk of this lecture is going to be more on the artificial intelligence side of our research, not the hypercube modeling or the VR. So the current state of Poseidon for the AI component is that I'll go in a little bit deeper on the next slide, but we do pattern recognition. I would call it a very low level pattern recognition. And there are some issues with convergence and being able to properly pattern recognize the market, especially when there's mean reversions or regime switching. The state of the system changes radically. Now, the research paper is a completely different architecture, as you can see, and it's more plugging in to a more advanced SDR system. This I wouldn't consider an SDR system. This is more just what I call a snapshot stack. And this research paper is more dealing with the SDR and emotional states. Then after this research is complete, we're going to move into the realm of fractal geometry, binary trees, and actually build a more three-dimensional SDR that's mimicking, as the best that we can with the technology that's at our disposal, the best that we can to try to model neural networks, but in a three-dimensional graphical way. So let's walk through the actual current Poseidon cognitive system. So there's two snapshot stacks within Poseidon. And the theoretical framework for this is that you do pattern recognition through trial and error. So market data is coming in, and you capture whatever values you want. In my case, I'm looking at a percentage price movement, volatility, drift, the RSI, correlation to another asset because of my pair trading or spread trading, and if I long or short the actual position. And what it'll do is it'll figure out, was there a positive or negative association based on that trade. And obviously positive association would be the positive P&L, growing your account value, while a negative association is the opposite. So this is kind of like positive association is positive reinforcement, negative association is negative reinforcement. And the snapshot stack is just capturing those 6 values and storing them in slices. So you have all 6 values, or whatever you want to look at. I look at these, but You have 6 values in one slice for time 1, another set of values in slice 2, another set of values in time 3, da 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 da. And what you have is you have these snapshot stacks of things that the AI has done that gave you positive P&L, or things that it's done that has given you a negative P&L. And the idea is that you reference the snapshot stack when you look at the new data that's coming in from the market. After you seed this, whatever data is coming into the market, then you reference the snapshot stack and decide, oh, I've seen this before. I'll copy the same behavior, which was long or short, and hopefully the same sort of pattern gives you the same results on your P&L. What happens over time is, as these seed, they almost fight each other. Probably because the number of values I have is not storing enough telemetry in the snapshot stack to really determine why the positive P&L happened. So you might be doing really well at first, and then all of a sudden you go to 50-50. And they fight each other. There's something that's in here that's fighting something in here. So that's what I saw with the current setup of the AI system. So we thought, okay, what kind of theoretical framework could we use to improve the snapshot stack? And so we started thinking of the idea, okay, well, we want to do pattern recognition. And there seems to be a lack of literature in quant trading, algorithmic trading, that's dealing with emotional states. I think most people would say, well, if you're going to build an algorithm to trade, that's taking the emotion out of the trade, and you'll perform better. That's the reason why you want to do algorithmic trading. It's to see opportunity quicker than a human possibly could, and execute without emotion. I think that's partially true, but I think that to do a real AI system, something that's really artificially intelligent, that leans more towards general AI, where it's more multi-purpose, than narrow AI, which is something that's more parameterized and very specialized. So we're trying to build a system that's a little bit closer to the general artificial intelligence realm than the narrow artificial intelligence realm. So you can imagine that market data could be any set of data for any sort of problem. And the algorithm could be any type of algorithm. So you could have inputs of a system, and you could have this objective function. The objective function would actually be your algorithm and your behavior, and then it's storing it into some sort of database. That's more of a general AI perspective than a narrow AI perspective. But the paper is totally focused on finance. So all the market telemetry that's coming in, it's all financial. It has nothing to do with non-financial type telemetry. So, we're trying to test which cognitive architectures work the best. So this new cognitive architecture, I'll walk through it really quickly. Market data is coming in. It goes into a particular algorithm, and there's only one algorithm per cognitive architecture. Then it decides to do a buy, sell, or hold, which is what we call the behavior. Then it calculates the profit loss, or positive or negative association. Based on that, we have some algorithms that actually build up a neurotransmitter chart. And then all this data, the algo data, the behavior, the association, and the actual emotional state, the neurotransmitter associations, are stored in the SDR. SDR is a sparse distributed representation. I'll go in a little bit more detail exactly what that is. It's a little bit different than the snapshot stack, but you can kind of see the kind of the similarities of what was going on in the snapshot stack and how it led us to the idea of using the SDR. And SDR in artificial intelligence is highly being used by, I believe his name is Dr. Kevin Hawken in University of California. The algorithmic box side of this, let's see here, new kind of architecture. So market data is coming in. So what we're going to do next is talk about what's in the algo box. So in the algo box, each kind of architecture only has one algorithm, and either a quant finance algorithm or a standard machine learning algorithm. So for initial experiments in this particular study, we'll need a total of 10 cognitive frameworks, and we'll have 5 quant algos and 5 ML algos. So the ones that we are currently working on for the paper are the levy process, the receding horizontal control and stochastic programming method, which is more of a, each one of these is a forecast method, but it does it a little differently. So the levy process uses drift, volatility, and a jump diffusion. This is highly predicated on stochastic processes during its forecasting. Mean reversion algorithms are commonly used in quant trading. Regime switching is also a common theme. A lot of this in the regime switching is statistical. Now, volatility and correlation surfacing, this is kind of the heart of the hypercube modeling that goes on beside it. So I have some ideas on utilizing some of that into the algorithmic box. So those are the 5, what I'll call the quant algos, and now the ML algos. The artificial neural networks, these are all off-the-shelf type stuff that you can get in open source. Nothing's really special about these. So, there's the typical training set, or for the artificial neural network, decision trees, Bayesian networks, clustering, and PCAs. So that's what we're going to compare. We're going to compare each cognitive architecture and determine which one actually performs the best. Now we've discussed the algo. It's pretty simple. The algo gets some information. It uses one of these 10 algorithms and has a forecast signal, and then a buy or a buy, sell, or hold is produced, and then an association is calculated, the profit loss of that position, and then now we're going to go into the neurotransmitter. Now in the neurotransmitter, this is the associations that will actually map to an emotional state. There are 4, I'll talk about the emotional states later on, but there are 4 emotional states: a calm state, a sad state, a happy state, and a scared state. And these associations will map to one of those 4 emotional states. So you can envision this as an EEG, an actual channel for an EEG that will tell you the state of the particular mind at that moment in time. So the first association in our neurotransmitter chart is change, which is, did it change its behavior? Stay is an association determining, did it maintain the same behavior? Fear is based on a certain threshold amount, and it is it's calculating when the forecast and the position going in is the opposite of what the market's really doing. It's building up fear. Danger is similar to fear, but it's actually referencing the SDR with a higher weight because it has a memory. So it senses danger only because it has been through a fearful situation before. So fear kind of leads before danger and seeds the SDR, and danger actually is somewhat of the memory of the fearful event. So if you're just started to trade and the trades were starting to be very positive for the first month, and then all of a sudden they're starting to become a sell-off, your fear would increase, but your danger would still stay relatively low because it's the first correction in the AI's knowledge. But when that correction ends and it starts to go back up, and let's say another few months later, another correction happens, danger will start to spike because it's starting to recognize the first correction in its SDR. So hopefully that you can see the difference between fear and danger. Danger is through memory. Fear is, it has no memory of the situation. Surprise reaches a certain threshold point, and it's positive. So let's say you went into the market and it went up, let's say 3% in one day, and let's just say the threshold was 0.5%. Well, it would reach the threshold, and a positive surprise association would be calculated. Trauma is the opposite of surprise, where you go into the market, you think it's going to be going up, it has a certain limit for negative, a particular loss of that position, and if it strikes through that actual threshold, it starts to calculate the amount of trauma that's generated. So you can have high trauma when you have a big sell-off, and if you've never seen the sell-off before, you would still have low danger, but you would have high fear. But if it's seen that sell-off before, you might have high fear, high danger, and high trauma. So you can now see in how there's some overlap. There's fuzzy logic that's going on here that allows us to map to the emotional states, the 4 emotional states. And protective is the typical risk aversion. Now, many people that do quant models or agent-based modeling, their risk aversion is constant, at least what I have seen. In this case, we have a variable where the risk aversion changes. The AI has a certain personality. Some AIs may actually become more risk averse when it's losing money consistently. But we can also design the AI to actually be more risk-taking when it's losing money, and actually be more risk-averse when it's gaining money. So you can get these personalities that are coming out of the AI by allowing the AI to adjust its particular risk aversion profile. Now, since we talked about the neurotransmitter, now we're going to talk about the SDR. Now, in the SDR, there is two types of the SDR. There's the big database, the SDR, or the whole enchilada. So, but what's being referenced in the cognitive architecture are 2 main SDRs. These 2 are subsets of this. So you have old SDR data and fresher data. So what we're trying to do with this idea is that you have long-term memory and more recent memory, and you're going to judge your behavior on the pressure data in the SDR. But if there are things that are happening where you lose the memory of a big sell-off, you would remember that big sell-offs, that memory triggers a danger if it's seen it before in the SDR. So you could have a big sell-off in the old SDR, but if we're more weighted to the pressure data, it would not sense the danger. So we have something where it would be accessing the long-term memory of the SDR when it's not recognizing patterns like it used to. And then it'll go and reference. But most of the trading is going to be referenced by the fresher SDR aspect of the database. Now, this is a data structure, and the idea is that we have a node name. This gets into a little bit of the next research paper where we go into more fractal, binary tree type data storage. Each node would have a name. It would be stored in an atom space. But for simplicity here, each one of these is stored with a node name. The positive and negative association from the account value, the behavior of the buy, sell, hold signal, the neurotransmitter chart, which I just went over, the actual emotional state that the neurotransmitter chart actually maps to, either the calm, sad, happy, or scared states, the timestamp, and the data from the algorithm. And those could be variables or parameters within the algorithm and the actual delta of the forecast relative to the market price. And the SDR has a complete history of what's going in, but it does most of its decisions with the pressure data. And when there becomes rare events that seem to be triggering strange neurotransmitter signals, it will start data mining the old SDR to see if there's something that it has seen in the past in its memory that it should start referencing.
Whoa. Paul?
Big sell-off. It's it. Hello?
Yeah, we're here. We're just losing you sometimes. Go ahead, though.
All right. So this SDR, it may have had it in its data set a big sell-off. Now, in that big sell-off, it could have been 10 years ago. So it's stored in the old SDR. And let's say it's been pretty tranquil for the last year or so. So the neurotransmitter has now forgotten the emotional state, and the neurotransmitter charts have forgotten what it was like to be in a really scared situation in a big sell-off. Now, there may be some patterns that are starting to generate a lot of fear and some danger in the neurotransmitter and put the emotional state into a scared state. When that happens, it will search the SDR for similar patterns that it's currently in, or in its relatively current situation, its time frame, its tempering its situation, and it will reference the SDR, try to find that same pattern. If that pattern is similar based on a certain percentage, then what it'll do is it'll copy the same behavior from the old data, and then you can see by recognizing the pattern in your old memory, you have now, because you copied the behavior, it went into the trade with similar SDR print, it's now transferred into the fresher data because you have copied the behavior. So now what we're going to do is talk about what is an SDR slice. So each slice in the SDR is time, similar to the snapshot stack, and that the SDR slice is similar to cells in the neocortex. All right, we're not trying to model the neocortex. This is a different system, but it's similar. There's an analogy to it, but we have these slices of the SDR, and the approximate size of this slice for just one time period is 99 by 20. So it's about 1,980 data points for each slice. And there's a pattern that's mapped on the actual SDR slice. What we're trying to do is recognize that pattern through time. And if a certain pattern reaches a certain probability, then it will copy the behavior. Now, what we do for our research is that we're using 10 years worth of data, and it's daily data. So you have basically 1,980 points for each slice. You have 250 slices, because it's daily data, for each year times 10 years. So you're going to have roughly about 4 million, about almost 5 million data points for each cognitive architecture within this research paper. And the idea is that you're seeding the SDR, and over time it's learning through the data that's being fed in. Now, the proto-brain. The proto-brain is what we are experimenting with to be able to fine-tune the neurotransmitter before we actually run the tests for the paper, for the 10 different algorithms. And this is some data that's been coming out of the system now. This is a histogram of the actual buy, sell, and hold of the proto-brain. And the algorithm that we're using, the proto-brain, is something very, very simple. One is the algorithm is you have the previous price, and you compare it to your current price before you go into the trade. So your current price compared to the previous price. If the current price is larger than the previous price, go long. If the price is less, then short it. If it's equal, hold. So that's just a really, really simple algorithm. And what's interesting about it is that when you do that, you generate actually slightly more biased buy signals than sell signals, and a few hold signals. And in the proto-brain, we actually are experimenting with oil market data, 10 years worth of oil market data. And as you can see, it also has the Lehman crash in here. Through this whole paper, we are trying to get the SDRs to be seeded with extreme illiquidity situations, to see what the AI, how the AI is performing in those situations. Does it sense the fear? Does it show the danger? Does it try to predict some sort of additional sell-off after the big mean reversion? So we have Lehman in the actual data set. And this is an example of the stay association within the neurotransmitter. Now, stay is a binary number, a binary neurotransmitter between 0 and 1, and it's going through each day and, saying, okay, I'm going to stay in my particular behavior, and then I'm going to be changing. So this is change, change, stay, change. So you can see that there's a signal here. So we're working behind the scenes to actually read the signal. It's not just the on and off, but the actual pattern that's happening between time. So we're not just, there's a signal that we're trying to read from this. And then the research questions of the paper are twofold. Can a cognitive architecture be developed to learn patterns in the financial market and trade profitably from them? And question number 2, can a larger cognitive architecture develop better pattern recognition in financial markets through a social learning method? And then the hypotheses. We have 2 null hypotheses and 2 alternative hypotheses. So the first set of hypotheses is there are no significant differences between cognitive architectures using, blah, blah, blah. The Levy process, the RHC and SP, mean reversion, regime switch, volatility and correlation surfacing, artificial neural networks, decision trees, Bayesian networks, clustering, PCAs for trade financial markets. The alternative hypothesis, there are significant differences between those architectures using those different algorithms within the different markets that we're testing. And the second set of hypotheses is there's no significant difference between social learning, that's the key, social learning cognitive architectures and cognitive architectures using the other 10 methods within each of the markets that we test. And then the alternative hypothesis being that there will be significant differences for social learning and the individual cognitive architectures. So the variables that we use are 2 independent variables. The first independent variable is the 5 different markets. We test each cognitive architecture with a 10-year bond, the S&P 500, the oil market, the natural gas, and the Euro USD market. And then the second independent variable is the 10 or 11 different cognitive architectures. The 11th architecture is the actual amalgamation of the 10 cognitive architectures built up from a social learning environment. The dependent variable is the daily returns. The sample size is 10 years of daily returns, approximately 2,500 returns from the study. For each one of these cognitive architectures to a particular market. This is a graph of what the hypothesis testing for number 1 is. You have the 10 cognitive architectures. Each one has its own algorithm. And each one of these is being tested for all 5 of the different markets. We're using a 2-way ANOVA with a 2-key and t-test to determine which cognitive architecture performs the best in which markets using 95% confidence intervals. The methodology for the hypothesis testing for number 2, this is with the social learning. So it's basically the same thing as the previous slide, except we have one new cognitive architecture. The idea here is each cognitive architecture might be performing better than another architecture in a certain market or during certain time periods within certain markets. And the idea is that there's something to be learned from this one and maybe this one, but not the rest of them. for, let's say, the first quarter of the data set. What sort of things in here could be learned and transferred collectively to the new SDR as a pattern, and learn from it. My current thinking for the social learning kind of architecture is that it has no algorithm. It's really purely emotion, the neurotransmitter, the emotional state based on that neurotransmitter mapping, and the SDR seeding from all of the cognitive architectures, what could be learned from it. You know, this SDR is going to be much different than this SDR, even in the same market. What could be learned from the collective pattern of this and seeded into an individual SDR to see if this SDR will perform better than each individual one of these. That's the point of this testing here. So this test is to determine if social learning improves performance in trading, you know, my gut feeling here is that through social learning we'll probably see the null hypothesis to be proven false, and that the alternative hypothesis to be proven true. Now, the emotional states, how this is mapped. These are the 4 emotional states: the calm, sad, happy, and scared. Now, the calm state is determined by the binary state of a stay being 1, change being 0, which is also binary, fear being a low value, danger being a low value, surprise being a low value, trauma being a low value, and protective being a low value. So you can kind of see, okay, it's calm, it's staying in a certain state, and all the neurotransmitters are relatively low. In a sad emotional state, the stay is 0, the change is 1 because it's trying to change its behavior. The fear is low, the danger is low, surprise is low, but trauma could be low or high. So if you're going into a trade, you want it to be going up, but it's repeatedly going against you, and you become more and more sad from that state. Happy is somewhat the opposite, where you are staying in that state. You have a low fear, low danger, but you have a low or high surprise, where you're seeing the market doing better than what you predicted for your position. Low trauma and high protective, which means very high risk taking. Scared is where you have zero state association, 1 change, and you have a high fear, a high danger, a low surprise, a low trauma, and a low protective. So that's how you map the neurotransmitter at a high level, how you map the neurotransmitter to an actual emotional state. Now, the emotional state mapping is, let me go back one here, not one, but a few here. I don't think I mentioned this. In the neurotransmitter, each association has a value. So the first 2 are binary, and then fear, danger, surprise, and trauma are 1 through 99, and then protective is 1 through 10. So they're numeric, and there is a function. Each one of these fits in an emotional function. Now, and in the protobrain, we're building fitting those functions. That's the purpose of the protobrain. So now, how do you map the stay numerically? How do you map stay, change, fear, all these neurotransmitters to the emotional state? Well, we use this chart basically, and we basically say, oh, if you're a 1 in stay, you're either going to be happy or calm, not sad or scared. And then it's, if you're in a stay, you're not going to be in a change, because these are opposites. And the fear and danger, you'll have different values here. So you can see here that if you have 1 stay, and let's say you have very high fear, if you have let's say if you have 1 stay, 50 for fear, and a low danger, a low surprise, because you're in high fear, and let's say you're at roughly around the 30 range for trauma, and you're risk averse, you're probably going to be in a calm state. And there's some fuzzy logic here that's going on. There are cases where you could be stuck between states, because you might have a neurotransmitter that is spiking on one, but low on everything else. And not all of these cells would be true statements for that particular emotional state. So if you're stuck in a limbo between states, what will happen is a random generation will take place to say, okay, I'm going to take you out of your sad, or you might be in limbo between sad and scared. They'll randomly generate, okay, you're going to be pushed into the sad state, or you're going to be put into the scared state. Same thing with calm or happy. You wouldn't have a limbo situation between happy and sad. It would be more calm and happy, or sad, scared. Now, that is how we map the neurotransmitter to the emotional state. So now what we've done is we have discussed on this thing here, we've talked about the algorithms, we've talked about, very quickly, the behavior of the system, which is the bicellular whole, the actual association, the positive and negative association is calculated for the P&L. What is the neurotransmitter, and what is the SDR? And the SDR is basically patterns of the algorithm, of the behavior, of the profit and loss, of the emotional state of the AI, and its underlying neurotransmitters that make that emotional state. And then this is looped, as new data comes in. Have I seen this pattern before into the SDR? Yes or no? If no, then go through its process and reseed the SDR, do whatever it needs to do. If it has seen the pattern, copy the pattern and figure out if the association is positive or negative, and then re-update the neurotransmitters and reseed the SDR for the new slice. So you can see here that on the SDRs, the SDR slices, that you can envision, you can see that each you have 99, right, by 2. This is just a representation. This is not to scale or anything. But 99 by 20. So you can see that there's going to be this pattern that's represented in the SDR slice of the actual behavior, profit, the algorithm parameters, and the emotional state of the AI for every single slice. And you can do these associations and correlations and predictive algorithms between slices, either the one before or the one after, or a lag, a version of the pattern between different, maybe you have a five SDR lag. You can take a look at the current state of the AI and the last 5, the fifth slice, the slice 5 periods before, and see if there's any correlation. Very similar to almost doing doing a Garch modeling method in quant trading. But it's a little different. It's a little different because you're doing pattern recognition inside the slice, and you're doing pattern recognition longitudinally. So now, we talked about that. Now, the actual next paper, once we prove this all out, once we prove through these hypothesis testings that a particular cognitive architecture works, or a series of cognitive architecture linked together in a social learning environment work, then, and this is kind of goes in hand with what Steve was saying about ants, certain ants working together. Some die for the colony, some are more successful for the whole team. That's kind of the concept of social learning here. So the next phase of this, once we prove this out, is to actually using virtual reality. Now this is the virtual reality component. Taking the SDR and building a three-dimensional neural network using fractals and with what's called the fractal brain theory, using fractals and binary trees to actually build the SDR. So it's, once we prove this work, I know from experience that this works sometimes. I know why it doesn't work. We're adding emotion to it and having a much better data pattern recognition system. And what we don't know, though, is, are there a series of algorithms, when linked together, do they work better in a social learning versus a non-social learning environment? Once we know this piece, then it's a natural progression, because I already know that. It'll be a natural progression to actually build this. And the whole idea is that there's feedback loops. And this is part of the reason why the first cognitive architecture didn't work very well. Is that there wasn't a very good feedback looping system in the current Poseidon cognitive architecture. There is a feedback loop system that's going on with the research paper that we did. And so we want to expand that out using the fractal brain theory. The fractal brain theory by Wei Sang, I think is how it's pronounced. He's in England, he's in London, and he's a self-taught individual. Yeah, I think he has an undergrad in computer science. He's in artificial intelligence, but he also does a lot of research in neuroscience. Very intelligent individual, and we've been, emailing back and forth a little bit. I want to collaborate with him on this fractal brain theory when we get done with our cognitive architecture study. And the idea here is that at the neuron level, there is inputs coming into the neuron, and outputs, and then there are outputs that are feedbacking into the neuron at the neuron level. Then when you add up many neurons, you have the same thing. In this cortical column, you have many neurons that are receiving inputs, sending outputs, and feedback loops at the different layers. Ones that that know a little bit about the neocortex. There's 6 layers to it, and different layers communicate. This is part of the underlying framework of the SDR that Dr. Kevin Hawken in California is doing. He's taking it at this level. He's using the SDR at this level. he's not using the SDR at this level or this level. So he has the SDR at many, many slices, and different layers of the SDR will feed back onto itself, and there is a learning process that's taking place. This representation is really the Mandelbrot set feeding on itself, and how it builds a pattern upon another pattern upon another pattern in negative infinity to positive infinity. So this, take it another step higher, you have multiple cortical columns doing the same thing. You have inputs coming into the cortical column from multiple cortical columns, and you have outputs coming out, and then you have feedback. So you can see at the neural level, at the column level, at multiple column levels, and then at tissue level. More like, maybe not tissue level, but the better way to phrase this is the lobes on the brain, different regions of the brain, major regions of the brain. You have certain regions of the brain feeding signals into other regions of the brain. You have that region sending signals out to other regions of the brain, and then there is a feedback system that's coming in. So you can see it at the neuron level and at the brain level. This structure at the neuron level all the way to the brain level has the same sort of pattern as trees, and in a binary situation here. But what we want to do is build in VR, the SDR, the seeding of the SDR, and actually be able to see it in the virtual reality world. So that's a little bit farther out. I'm not there yet, but that's the progression of the roadmap of this research. And then I've written several books. These are 4 of them here. And the first one is my market philosophy. The other one is about dynamic hedging. This was my dissertation, using a receding horizontal control and stochastic programming for the oil markets and the currency markets. Escape Velocity is a risk management book that I wrote. And Black Box, the Alchemy of Finance, is research design, hedging, and pricing models for trading. And then you can contact me either through my website. Here's my email. You can follow me on Twitter, and I do a lot of publishing of videos and whatnot, and I pass a lot of that stuff along to Brian's group. So I'll take any questions if you have them.
I know Steve's got 2 questions. I don't know if you can read them. Do you want me to just repeat them just for video playback?
Yeah.
He's got, the sell-off can act like an allergic. Is that the first? Hold on here. Okay, so let me just make sure I got them all. Okay, this is the first one. The SDR can act like an impulsive teenager or a more calcified older person. Does that make sense? Calcified?
Calcified. Yeah. I mean, the thing is that we're trying to build in the kind of architecture, not a mindless quant algorithm. I don't want that. What I'm trying to do is actually, because it's not, if I can do this, I can just pull out the objective function in the kind of architecture and apply it to something else. I can apply it to genomics, proteomics. I can apply it to, other types of disciplines. It all works. And the theoretical framework of this is that a child does not know anything when it comes into this world. The only thing it can do is cry. And that very state of emotion is the foundation of our knowledge. That's the underpinning of the neuroscience of this.
Okay. Then he followed up with another comment. The sell-off can act like an allergic reaction, setting off the fear and protective responses to the perceived market risk.
That's true, and you can see, at least in the science, the complex science realm and behavioral finance realm, the idea of herd effects and how they, how they can move the market when there's extreme fear.
Okay.
During Lehman, where there was extreme fear and everyone saw their portfolio crashing and they started hitting the sell button.
All right. Another comment from Steve has said, in methods similar to matching and mirroring and neuro-linguistic programming, the system could value the emotion of the market and see how closely the neurotransmitter can match and mirror the market calmness or jitteriness, the goal being to be in sync with the market as it changes.
Right, exactly. Now, this research paper is really to test scholarly different markets with different kind of architectures and to know how the emotional state of the AI is changing through time for these different markets and for these different architectures. But we focused on the emotion of the AI, the neurotransmitter mapping to the emotional state and storing it in the SDR. Well, what you could have, and what you could have is a cognitive architecture that its algorithm is just to read the market. That's the algorithm. All it is reading the market. It's not making a buy or sell signal. It's just saying, what is the market doing? And it is storing, did the market close that day higher or lower than the previous day? That's all that is, all the algorithm and the behavior is. It's seeing how, if the market is moving positively in a positive direction or a negative direction. And then storing that emotion state. So I'm pulling out of this kind of architecture for the AI, the trader AI, pull this out, the market data comes in, it calculates the actual positive or negative association, it stores the neurotransmitter charts and maps to the emotional state of the market, not of the AI. Now, by taking this out, we're actually turning this kind of architecture into the AI of the market, not the AI of the trader. And you can look at the SDR as this gets seeded. You can compare the different slices of the SDR of the AI of the market and the AI of the trader and find buy-sell signals from that, which is a little bit more advanced. It's actually social learning. It's social learning, to the next level, because it's not just social learning of different trader AIs, it's using social learning of also the market AI, if that makes sense.
Yeah. I think we just got another comment come in as well. So Steve added, in the end, your product could be perceived to be having multiple personalities. Schizophrenia may be a model to work from.
That's true, and I wanted to show a video that proves your point. This is a video of the proto brain that we're doing to actually start fitting the different neurotransmitter associations before we start mapping the emotional state. And so you have here the actual price from the oil price curve, all right? And we have the change association state. We have an experimental association that's not in the PowerPoint called hope, fear, trauma, and surprise. So we don't have danger or what's the other one? Danger or protective yet in this video. So what I'm showing here is actually the hopefully you see this in real time. I think you can.
Yep.
The oil price is changing, and the actual trader AI's emotion, neurotransmitter states are changing in real time. And we have a 50-day, not a 50-period moving window here, and each one of these prints matches the actual print for the oil market. And what's interesting, Steve, is that you'll notice that there's some discoherence in fear and trauma, and you'll see these little things going on. What we don't know yet is the actual mapping of the associations to the actual emotional state. But what's going to happen once we get done with the proto brain is there's going to be a picture. I'm going to have 4 pictures that actually are flashing, and the 4 pictures are like a Buddhist monk. So they'd be in a calm state. A scared state would be maybe Nightmare on Elm Street. A sad state would be someone looking depressed, and then happy state would be someone looking happy. But you'd have these 4 pictures that are changing, and you'd actually see in real time the emotional state of the AI or of the market if I took out the algorithm, and see, oh, the market's calm, but my trader is scared, or my AI is happy right now, and the market is sad. And the reason why that difference is that AI trader learned through its SDR to short the market. So you can see the power of this. Here you can kind of see some of the schizoid thing going on. But yeah, you're right. You can see, especially when you do the social learning aspect, you'll have certain kind of architectures that are sad and certain ones that are happy. There's some social learning from that, but we're not there yet. We're getting there, but I had to build a proto brain first to be able to. This is just a rough cut of fitting the functions for each one of these emotional states.
Just so you know, Paul, Steve just added 2 new comments. One is this emotional roller coaster that is so wearing as a manual trader? Or that's what a comment is. You want me to repeat that, or?
Yeah, say that again.
Sorry, I messed that one up. It is this emotional roller coaster that is wearing as a manual trader. So it's all these mixed emotions that messes up a manual trader. That's what he's saying.
Yeah, I mean, maybe it messes up the. You got to remember though, this is only one part of the code that's being stored in the SDR. The emotional state and the neurotransmitter, it's only maybe 30%, 40% of the SDR slice. The other parts of it are, did it make a profit or loss? What were some of the parameters and variables of the market and the algorithm? What was the actual behavior, the buy, sell, or hold signal in the SDR? So the idea is that it's not just the emotion. I mean, I could make an algorithm where it's just reading this and then do trade signals from it. But that's more like that's just using neuroscience and quant trading, quant finance, and merging them together. What I'm trying to do is do neuroscience, quant trading, and pattern recognition using the SDR methodology. I'm trying to do all 3 of them together. I think that there's a synergy there. So usually a trader is, it may be just emotional. It may have some memory, short-term memory or long-term memory based on its trading behavior, but it's there's a little bit more to it. If it's a good trader, if it's a good AI, you'll see the fear start to go down. You'll see the trauma start to die down. You'll see the surprise go up. You'll see the hope go up. And you'll see some sort of calmness going back and forth between change and state when it's changing its positions in the market from short to long, long to short.
Steve just.
There is a signal. There is a signal of an AI that's good, and a signal for an AI that's bad. And that's when you start seeing these spike. When the fear and the trauma are really high, you can tell that the AI is not a good trader.
Steve added, happy and sad relate to being in profit or loss, with a question.
Right. Yeah, right, exactly. Because if you wouldn't be in a happy state if you didn't have a positive P&L. You'd be in a sad state because you keep on forecasting the market wrong.
Anybody else have any comments or questions at all? Nobody? Anything that you want to add, Paul, at all?
That's pretty much all I had to present.
So I guess the question is, from my end, where does the money management factor come in, as well as, I mean, I know you obviously can have risk here, but part of forecasting a market direction, let's say the next day or next few hours, how, like, as part of this, where does the risk factor come in?
All right, to answer your question, what we do here is you gotta remember this, this study is to prove if one architecture is better than another.
Got that, yeah.
Right. All right, so this isn't, once we do this, it's not, okay, buy cognitive architecture number 3 and it's ready to trade. That's not the study. That's
right.
Not what the study is.
Okay.
But in this area here is where your risk management profile, the calculating of your profit loss would be this function here. That's where you put it. You could get really advanced where you have dynamic hedging. You could, do stop losses at a certain percentage loss, and then you close the trade. Could be generated here. Now, what we do have in the neurotransmitter, part of the money, I wouldn't call it money management. I would call it something different. It's this change association is the AI signal to change your behavior. You would only want to change your behavior because of 2 reasons. You see the opportunity in the market and you have very, very high confidence of that change that's going to take place. So you have high predictability. You have high confidence of your predictive behavior. Or you have very low predictive behavior and you're forcing a change so you become more profitable. You see where I'm going with this?
Yeah, I am.
So it's in these associations. There's an emotion to, I need to become profitable. And this is going back and forth. This, I think the view, I don't have the data yet, but I think that my intuition is that you could have a really crappy algorithm and eventually your SDR will get smart.
Right.
And then this will turn off. And the only thing you need is the market data coming in. You have something that says, go look at the SDR for a pattern, similar pattern.
Right.
Go hunt for it. If it's not in here, and your emotional states or neurotransmitter states are such not to reference old data, just stick with your fresher data
Right.
and then execute the trade the same way that you did before. And update your SDR based on the next time period if you made money or not from that. So your fresher data in here is kind of giving you best practices, best recent practice for trading. And there's that feedback loop that I was somewhat missing here.
Yeah.
This didn't have enough feedback and learning. Well, this has it.
Yeah. Well, I guess what I should have specifically asked is
your money management is in here, could be in here,
mm-hmm.
or built into the actual change state association.
Well, what I was trying to figure out, let's say if you have a set of trades in parallel or positions in parallel, 50% buy, 50% sell, and then you come into your management, money management, how do you dynamically program your SDR to allocate certain weight?
Yeah. This study is one position.
Okay.
Not multiple positions.
So how do you envision that then, I guess, the question?
See, the question would be, should the neurotransmitter be the overall portfolio, or should there be a neurotransmitter chart for each of the positions? If there's a neurotransmitter chart for each of the positions, then they're kind of, they're separate.
Right.
My gut feeling is that you want to aggregate it to the overall, the overall AI.
Right.
So if you're going to have 5 positions coming in, you're going to have the same algorithm. In this study, you would have telemetry of 5.
Okay.
I'm just going to play around with this here. So so this here, copied. And I'm just going to show one copy, but let's just say it's 5.
Okay.
You have 5 of these things going into your algorithms.
Okay.
You have the same algorithm, but it's spitting out. It's taking input from 5 different markets and spitting out output 5 different ways.
Right.
And it's going to be buy, sell, or hold for these 5 things. So you have 5 different behaviors.
Understand that.
All right, per time.
Right.
And you're going to have associate. You're going to have 5 different calculations for each of one of these markets, or each one of these assets.
Okay.
And an positive or negative association for when you calculate your profit loss.
Right.
Then you would have in here you would probably say, well, if I'm in a situation where I have complete drawdown of X amount, shut down all the positions or only 2/3 of the positions.
Okay.
All right, and then from that positive negative association of the aggregate of the portfolio, the total portfolio.
Right.
That's what feeds into the neurotransmitter. And then the neurotransmitter would then map to the emotional state and then stored in the SDR. So what would be in the SDR would be a bigger slice. You wouldn't have just this type of slice. You probably would have to have 99 times 20, probably times 5.
Right.
Because you're capturing 5 different assets for each SDR slice.
Understand.
So that slice would just be a bigger slice, and then you would see a pattern. Then the beauty of this would be, well, if I'm trading 5 assets, is there a pattern where when some assets start to go down, Others may have a 10-day lag before they start to go down, or the opposite. Maybe they're negatively correlated.
Okay.
You would see that pattern in the SDR. So you'd actually see a graphical, a cortical representation of those 5 assets that are going into the cognitive architecture mapped into each one of these SDR slices. And that pattern is the correlation. You can have learning from that. It's an interesting thing. It's a little different than what I'm doing here, because I need to try to isolate one market, one asset, one algorithm at a time to know why this one is better than this one.
Go ahead.
But once you know this, once you run the tests and statistically know which one works better for which market, let's say it's this one here, then and it's for oil, let's just say, then we go into the oil market with this cognitive architecture and then seed the SDR by reprogramming the telemetry to have 5 pipes. If whatever maximum number of assets you want to trade on, you set that set end to whatever, and that's the maximum pipes that are coming into the algorithm.
Right.
The algorithm is spitting out n outputs for each of the behaviors, and then you can have some sort of money management right here to determine if a certain overall drawdown takes place, start closing positions.
Okay. Okay, I understand. I'm not sure if anyone else has.
It's interesting that what your idea, your question, is actually expanding the SDR, the actual the grid size of the SDR slice.
Well, I guess where I'm kind of maybe going with it is as you are testing different algorithms against one another, are you trying to say, as part of the study, you're trying to see which algorithms under certain conditions perform best and for which particular assets at that particular time? So there's that snapshot. But the question would then be, are you going to throw away all those other algorithms for that particular asset, or do you keep them kind of like on a standby kind of basis where if the market changes, you have this SDR watch, you have a set of patterns that the system can watch? Do you at some point allow those other algorithms to kick in that didn't perform as well as in the past, or how are you?
Well, there's probably a few ways to play this. You could have them in the background where, let's say, the algorithm stops performing as well as it used to. Which
will happen.
When that happens, then it would go, oh, now it's. I think that's what the social learning is. Let's say we like this algorithm, and it works 80% of the time statistically better than all the other ones. And let's say that when we did testing number 2, that we proved that social learning was actually better than any one of these. All right?
Right.
So we go into production and say, we're going to use this one. All right?
Okay.
So when we go into production and we're starting to trade, this is doing really well for, let's say, a year.
Yeah.
And something's happening in the market and it starts to break down. All right? You can have these running in the background, right?
Oh, okay.
And feeding their own SDR.
So
you're comparing to see do they have a better success rate? This is your real trade. These are all your behind the background. If you trade it with that, what the profit or loss would be.
Right.
And if this starts to break down, and your grid is saying, "Oh, I found a cognitive architecture that's performing better, use this one now. You just turn this one off and turn that one on.
Gotcha. Yeah, that's what I thought. Steve had two more comments here. Very short ones. He said, pretty cool, interesting way to sort the market. Then he had a lengthier comment saying, you could have each subsystem running but not necessarily put to the market. But as it's going through, the one that is showing the best results get priority, and the losing ones are relegated to do not trade live until they show they are doing better. Okay, so it still continues.
Right. And so that's what we just what we basically just reviewed.
Right.
My gut feeling. This is my gut feeling, though, Brian.
Yep.
My gut feeling, and I'll wait until the statistical data is out and proven in the paper. Right. My gut feeling is that the way this is learning, it's more like how a child learns and how to walk.
Okay. Okay, got that, yeah.
To crawl, right?
Yep.
This algorithm can be really, really dumb. And it will eventually be turned off because the SDR actually has learned the pattern of the market.
Right.
This is like supervised learning. View this algorithm as the training wheels on a bike.
Mm-hmm.
And once you learn how to balance yourself, you take off the training wheels, and that's your SDR.
Yeah, I get that.
And so my gut feeling is that, and that's why we did the proto brain with a really, really bad, simple algorithm that I know doesn't make any money.
Mm-hmm.
And my feeling is that over time, and I don't know what that time is, but over time, this algorithm turns off. The way at the very beginning of the cognitive architecture, this is 100%, SDR is 0 because there's nothing in the SDR. But as time goes on and the SDR is seeded, more and more patterns are going to be recognized, and less need for the algorithm takes place.
Right.
There's an automatic shutdown of the algorithm.
I know of some systems that do that where they'll basically go out and look at, I guess we'll say, terabytes of data, and basically dynamically try to figure out what patterns it sees in that data, and then build a database of patterns around that. And then at the same time, because what you're doing right now is you're setting up listeners to the market, whatever they may be, based upon whatever algorithm, and then dynamically generate other patterns, or if you're still listening to the market, have whatever recorded patterns you have in a database, call it the SDR, that you can say, okay, we think that the probability based upon these set of patterns will the market direction will be this. Does that make sense?
Yeah. Right.
Okay.
Yeah.
Oh, okay.
What's interesting here is that even with this simple concept of 99 by 20, so you have 99, rows, and you have 20 columns for each slice. And let's say we did your idea where it was 5 assets being traded, so times 5.
Yeah.
With that, even with 10 years worth of data, of daily data, these SDRs aren't that big in terms of space. Like our research study for each cognitive architecture.
Yeah.
It's going to be about 5 million points, data points. So let's just assume each data point is a byte. Well, that's only 5 meg.
I get that, and I know that the data that you're referring to is always just end-of-day data, correct?
Yeah.
Okay, so what you'll do is, I'm going to assume, is you'll have an analysis done at the end of the day, and then the system will maybe, during overnight, will open up positions based upon what the SDR sees, like the next morning. Is that how you see the position management being executed?
Yeah, yes, because what it's doing is it's taking the current state of the market, the current state of the emotion, and the current state of the SDR to see if there's a pattern.
Right.
If no pattern is recognized in the SDR, use the algorithm's forecast to determine the trade.
Right.
So when that morning, you know, the opening happens, your behavior is whatever the algorithm said to do.
Right. I
If
just
it saw the pattern in the SDR, it would copy the same behavior, the buy, sell, or hold, and just totally ignore whatever the algorithm had to say.
Yeah, I just want to invite Steve and Tony in because there's only 4 of us now. Hey, Steve, oh, there he is. Yeah, chime in, Steve. You've added quite a few comments. Go ahead, Steve. He's there. He just unmuted himself. Steve? Because he's added some comments. I didn't want him to think that, be part of this discussion. Yep. Yeah, go ahead, Steve. You added some comments.
Oh, you could adjust your how much trade depth you're going to put into the market based on your profit and loss. If you're ahead or far behind, you can add more trades or reduce your trades.
Right, that's a good point. That's a good point. That the amount of pipes that are going into the algorithm for referencing the SDR could be variable through time. And instead of 10, it goes to 3 if you have a big shock to the market, or it could be referencing the actual emotional state of the AI. If the AI is scared, it may not want to be trading a lot of positions. So it may say, if I'm in a scared mode, I only have max 2 positions open. But if I'm in happy mode, I might want to open 20.
Especially if you're in profit. If everything's going all right, then keep it going.
Right, but remember, the profit is mapped into the neurotransmitter. So if you have profit, you'll be happy.
In each individual slice. Right. So some of your slices might be happy and some slices might not be as happy.
Right, but what we're doing is we have a moving average of the SDR for the emotional state. We take the pattern for each slice and take the average of, let's say, the 10 slices and determine what the emotional state is. We can do the emotional state per period or a moving average. The emotional state per period would be more schizophrenic. If you do a moving average, then you're going to have a little bit more, it'll smooth out. Which makes sense, because if you think about people that are schizophrenic, from a neuroscience point of view, they don't have the ability to filter out data that is unimportant. They absorb all the data. It's a fun. You absorb all the data. That's why they're
overloaded.
Yeah, and they start freaking out. They're really good at one thing because they see everything that needs to be seen to be good at that one thing. While normal people, they have a filtering mechanism where they throw a lot of the information out the window. So, we could actually take the AI and turn it schizophrenic. We could dial in or dial down or dial up the level of schizophrenia.
In the markets, they call that risk.
Well, I saw something recently that back in the days of Steve Jobs and all those guys, they were dropping acid. And they say that's what led to a lot of their successes.
How do you think Stairway to Heaven was written, too?
Yeah, those guys were dropping a lot. So I don't know. You could, in effect, drug your system. It's a little tense. Give it a digital drink or whatever, a Xanax or.
Well, it's in a strange way, we have thought where when the SDR starts to get seeded, all right, and we start to have these patterns that are happening, and right now this is the protobrain, so we're just starting to build the functions to make this a little bit more wave function. So this is just kind of a rough cut. But let's just say that we're always in a trauma state. If we're always in a trauma state and we always sense danger, then it's similar to like a post-trauma traumatic stress disorder,
Mhm.
right? So
You
we
hear a
can,
loud noise, you think it's a bomb or a gun.
right. So what we can do is give a lobotomy to the SDR and erase some of that bad memory.
Oh, almost like a therapy session for your therapy.
Yeah. So we erase some of the bad memory by giving it the lobotomy. Then what will happen is this here will forget the trauma and the danger, and it will come back down. Right now you have training it, but when you take away that bad experience in the SDR, I would think that the neurotransmitter chart would actually calm back down.
Just like a therapy session with a psychologist, psychiatrist.
Yeah, kind of. But I mean, it's strange of just even the way we're conversing about the market and how
like trading
AI. Yeah. So, you know, it's interesting. It's interesting to see and how how to handle these sorts of situations. But we even there is a certain personality. I think that was the main point of the research, is that it's moving out of narrow AI where it's more fast. It can calculate quicker than a human, pick positions better, go in and out of positions better. That's narrow AI, right? But general artificial intelligence, there's more nuance. There's more personality that's added into the system. There's more
actual almost personality, almost like human personality.
Yeah.
You could create a calm trader that is always, you check its stats. It's always a calm. Only enters the market when it's calm, and that it stays calm and it never gets rattled. And you have another hyper one that maybe makes more money, but kind of scary to watch. Maybe.
Well,
What
Paul,
would be interesting is linking them together and seeing what kind of social learning comes out of it.
Left brain and right brain have a fight over it.
Yeah.
But, I think it's the corpus callosum. I don't know. There's the center part that joins those together in the brain.
Mm-hmm.
I'm not a brain expert, but
I was going to also ask about regarding using data sources for anything that's forward-looking. Or you could use things like guidance coming out of what a lot of different individual companies are saying about their market, using that kind of data to feed into your system.
That's the beauty of the kind of architecture here. Again, this could be anything.
Yeah.
And this literally could be anything. This could be the phases of the moon relative to the market, and you are building an emotional state.
star chart.
You could actually astrologer AI trader.
I've seen some of those people. Actually, they're actually out there. I don't get it, but if they can make it work, more power to them.
Right. But what's interesting is there's a feedback here where even if this is doing the wrong thing, telling you to do the wrong thing, the market really is going up, but the algorithm is saying sell, short it. You do that short, and you have a negative, P&L. You are the feedback here is that you're going to go into a scared or sad state and want to change your behavior. So it's going to override this. Over time, it's going to say, you know what? I've seen this market behavior before. I did this and it was bad.
So I X that option off.
Yeah.
I don't do that bad one
anymore because the SDR is saying, oh, you see that? You sold. You see the same pattern in the market. You shorted, but you really should have long. The SDR will override the algorithm and tell you to long. So even if this is a bad algorithm, the process over time, as this gets seeded, the SDR is seeded, it learns from its mistakes through trial and error.
It has to have the mistakes to grow.
Right, exactly.
And so it just awakens. It's almost like that TV show, God, what is it? Person of Interest, I think.
I haven't seen it.
Well, they have this super computer that just, absorbs all the data that's out there, and it chooses somebody that's in trouble that the system doesn't normally care about. Kind of the idea of the show. Might be worth a shot once if you haven't seen it. Kind of might give you some ideas.
Well, it's funny when I talk to people about this research, because I got a lot going on. I mean, Brian knows my schedule.
Oh yeah.
I got a lot going on.
We asked.
And I really don't have any time to watch TV or anything like that. I'm either voting or trading or doing a lecture or I'm in this hyper mode of just creation. I'm in creative mode right now.
To be honest, Steve, I think Paul's not really actually human. He doesn't sleep.
More Spock, more Vulcan.
Or he's the biggest taker of amphetamines out there that he just doesn't want to admit.
No, but I have a lot going on, and I'm getting to a point where I need to slow down a little bit.
At some point, you'll slow down whether you want to or not.
Yeah.
Speaking from experience.
Yeah, exactly. But I mean, I see a lot of benefit. You can see the evolution. This is what I like about this project. Is these other papers that we're doing are more econometric. Some of it talks about volatility of the market. It's more finance. This is the paper that's heavy duty artificial intelligence. But you can see the evolution of this. The snapshot stack, and not having the feedback loops that I needed for true pattern recognition and learning. This has that feedback, but it's useful. I think it'll be useful for trading, but it's not mimicking the way our brains really work. This here is the way our brains really work. And there probably is going to be some really interesting things that go on in the feedback process when we upgrade the SDR into this three-dimensional binary tree lattice.
Like an opportunity tree and a liability tree.
Yeah. And then we'd be able to roll them around in VR and actually see the tree light up in certain patterns, certain ways.
Cherry pick it. Take the better opportunities out. Leave the nasty ones.
But we would actually see the SDR, the way that's set up. You can imagine each slice. This is lighting up for that time. Another one's lighting up for another time, and we're looking for patterns, right, between slices. So they're kind of stationary. But when you use this method, where is it? This method here, where it's more like a neural brain network, you'll have certain regions of the brain on, certain regions of the brain off, certain regions of this thing sequenced in a certain way. And so it's more three-dimensional versus this static slice concept. I think when you have that, there's something will emerge that we would really consider general AI. This is narrow, very narrow, not very functional, not as good as I want it to be for a trading environment. This, I think, would be very good for a trading environment, getting closer to general artificial intelligence, but it still would be in the bucket of narrow AI. This is general artificial intelligence. This is a brain that could be seeded, an SDR that could be seeded for multiple things, multiple talents, multiple, not just trading, not just a certain market or a certain asset class, but it has, there's another set of dimensions that allows it to emerge intelligence.
Yeah, you get it to run hydroelectric and how much water to leave in, how much to let out, all that kind of, just that kind of logic.
Yeah. But to get to here, this was almost a year to realize this. And it's probably going to take a year to go from here to here. But maybe longer, I don't know. Maybe I don't have enough computational power to do this. I don't know.
It keeps getting better. So
yeah.
Don't today.
And
I
cloud.
would have never been able to do this 10 years ago. On the computers.
Yeah, but don't forget, cloud technology is your best friend as well.
Well, that's another solution. This is the Databricks, borrow a few cores, have it calculate, spit out the answer, come back. Yeah, that's a possibility. I don't need it for this because the SDR is small enough. I don't really have big data problems for this study here.
Mm-hmm.
You might start getting into big data issues with tick level data, higher frequency data. But again, you can get around that because you're using pressure data more often than older data. So this is more queuing. This issue is more queuing the SDR.
And you could slice it so that one SDR has minute 1 and SDR 2 has minute 2 up to say 10, and then so it does all its calculations, and then when it gets up to its time, it says, okay, this is what I would do, or not do, or whatever.
Right. There's a lot of things that could be done with lagging certain layers in the SDR. And that's very similar to how the actual neocortex works between layers 2, 3, and 5 and 6. There's what is called a feed forward mechanism, and then what is it? It's a feed forward and then like a feedback. Forgot the term. I mean, neuroscience is a very interesting discipline, but they got their own nomenclature for everything. So layer 2, 3, and 4 are where our sensory inputs go into, and when it goes into layer 4, it's predicting. If it's predicted it and it's stable, it goes to the layer 2, 3 for the neurons. But if it's not stable, it'll start going to a higher level in the brain, which is layers 4, 5, and 6. But depending on if it can predict or not, depends on what layer it's going into. So if you use the neocortex as a model, if it's predicting it's at a more shallow level of the SDR, then you're fine. If it has high predictability. But if it has lower predictability, you have to go deeper into the SDR.
Yes,
how long does it take to grind all this out? Does it eat up quite a bit of time?
No, that's the beauty of this. That was the point I was trying to make with this data slice. You're only talking about now again, this
5 megabytes.
The whole SDR for 10 years, because I'm using daily data, is only 5 meg.
If you went to tick data, you just don't go back as far.
Right. Well, yeah.
You still populate the same.
Right. So even if the SDR was 50 gig, right, you could still process that easily because I work on video files for my lectures that are in 1080p, high definition.
Lots of dots, yeah.
Yeah, they're like 350 gig files, that I'm editing. And I'm using a Mac, with, 16, gig of RAM, with terabyte drive, it doesn't, so yeah, it's possible. It can be done, but the bigger your SDR, the more, the
Time it's
more,
going to take to line up.
the more, what's the term I'm looking for? The more weight of the code that you have, the slower the system's going to be.
So you can pre-process and say, if we get to this point, X above, or this point, X below current price, or 2X above, or 2X below, and so on and so on. If I get to any one of these points, I could have my logic pre-calculated. Oh, if I go up 2, then I'll enter. Otherwise, I don't do anything, or whatever the logic unfolds.
I think the key is that even though we have a ton of data in our head, we can do very, very quick knee-jerk reactions that are
Emotional.
It's emotional, but they're also successful.
Or not, can go either way. If you're a good trader, though, it's successful.
Yeah, I'm looking at it more. I do kendo. So in kendo, you train to try to almost control your emotion. In kendo, you lose because you hesitate. You lose because you are fearful or you doubt yourself.
Your emotional sub-processor takes too much time.
Yeah. So when you're in the state of calm and it's harder to train yourself to do this when someone's attacking you with a bamboo stick, right?
Yeah.
It's hard to not. It's hard to just say, okay, I'm ready to die.
Forget the trauma.
But the strange thing is that when you're in that state, that zone, even if it's for just a few seconds, you have the advantage. Even if they attack first and they're in motion, by you not fearing, you can block and hit at the same time and win. And so there's this quick reaction, but you have to be in a certain state of mind to do it. You have to have the right level, the right mindset to be
Flow.
Yeah. And so, I'm not, you could have this gigantic SDR, right? But you don't necessarily really need to process it all the time. And the important parts of the SDR could probably be queued into a file that could be referenced. So you have an SDR, you have like a pseudo SDR, and then you have the actual.
What do we do now, SDR?
All the time, loaded in memory.
So older memory and older logic is more calcified and held in stasis, and then you work on day-to-day changes. Yeah. That's
what I call the old data, the SDR. This is more calcified. This is gaining. This is getting dust. Well, this doesn't get too much dust. This is constantly, there's a lot of activity going on in here.
Oh, it's like 50.
It's layering. So the old SDR is actually getting bigger, while the fresher SDR is the same size. So as time goes on, this SDR gets bigger, but the referenced SDR stays a certain slice size. The old SDR is growing. So it gets harder and harder, or slower and slower to reference patterns.
So the fresher's like Groundhog Day, the movie, I guess.
I didn't see the movie. So.
Basically, he wakes up on Groundhog Day, and then every day is Groundhog Day. And so every day he tries to do a little better. He doesn't step in the puddle. He doesn't, different things happen along the day. And he gets a perfect day out, more or less. I mean, that's very short, but the idea being that the fresher data, it's lost periodically and rebuilt, and lost and rebuilt, which is almost
Exactly.
a spiritual state of empty cup.
Kinda, and that's almost like it's doing its self-induced lobotomy that we were talking about here, where we have the schizophrenia.
Mm-hmm.
You need a fresher SDR, so you're not too
Stuck in one.
traumatized from the previous experiences. So that's
But those traumas should be somehow put into the long-term SDR as some kind of a, hey, don't do this again. Put your hand on the stove when it's hot. Bad idea.
Well, I think what's going to happen is that certain drawdowns on the portfolio are tagged in the old SDR to reference first. When something's not referenced here, go to the old SDR with special tags. Read those first and see if the pattern is there. If not, then search the other older data, slices.
If we're not in a really bad place and not really scared, then let's give it to the new thinkers.
Right.
Of the sort.
Right.
But the old thinkers, it's almost like you have wisdom and youthful exuberance.
Yeah. And I think the way you're describing it is the right way to view the whole philosophy of this. Is how we live as humans is how we need to start programming certain algorithms.
The good parts of what we do.
Yeah. No,
There's bad things people do. We don't need to.
Maybe we need a bad AI. I don't know. Maybe, but the point here is that
The Russians
yeah,
steal it.
having Yoda here, and Luke Skywalker here,
Right.
Makes a lot of sense to me. But,
Yeah, and maybe even a middle one where the fresher data kind of becomes like a moving average of previous fresher data. But then that becomes even more kind of moving average. I don't know if that's the right word or whatever, but into the old data. And
right.
kind of a memories list in the old data, like non-farm payroll, and it went 200 points up. Oh my gosh, this is not normal. Scary.
And that's interesting you say that, because we had a big debate with the team. Do we use econometric data for the algorithm? Where you could actually go in and state, well, you're reading the GDP, you're reading what's going on with the Fed funds rate, you're looking at non-farm payroll, and maybe even current trade deficits or whatever. Based on that information, when it comes out, you using the econometric regression sets of formulas, and you can do prediction and say, well, the market goes up X percent when it beats on the forecast. Well, you basically do a buy or sell, based on that situation, and then this whole thing's seeded based on, did you make a profit or loss? And what the beauty of this is that your econometric model may be very bad to reality, but the SDR and the emotional state trains the AI to start ignoring this.
Mm-hmm. Well, when it has a better idea consistently.
The SDR will will have the correct thing to do in here.
But when it's young, it's like a baby, and you don't let the baby determine your family finances. You want the adults to do that.
Right. So what you have, so in that case, what
You
you're
have
doing,
a premature SDR.
you're seeding the SDR with an algorithm. But this algorithm could be data that you seed the SDR. You could pick any algorithm like the phases of the moon, all right, and you seed the SDR with historical data. Once this gets to the point where it's learned that this algorithm sucks, what to do to trade the market profitably, you turn this off, and then you now put the SDR in production to trade that particular market.
Once it's qualified itself.
Right.
Some sort of test.
It stays in school. It's in school stage. Stays in school until the SDR feels confident enough that it's used, let's say, 85 or 90% of the time. If it's used 85 or 90% of the time, it graduates to production.
And another one starts to form as that happens.
You could have like all these different SDRs that are evolving. Let's say you might have an algorithm that says the SDR goes into production, and it can only be in production for, let's say, 45 days, and a new SDR comes in. And
well, it's just compete the old and the new SDR against each other, and whoever wins, wins. So it's kind of a genetic.
Yeah, but the idea is that the new SDR takes the best practices from the old one. Plus it's schooling. So it's taking new stuff plus the schooling stuff.
And maybe some mutation.
Yeah. I mean, you could actually have these SDRs evolve genetic algorithm type.
Or have an army of them, and just like a class, there's a smart kid sits in the front row, and that other guy in the back row, never gonna make it, or whatever. Yeah. So you can have a bunch of SDRs seeded with slightly different, seeds or start points, and then they compete against each other. I don't know. I think that takes your idea beyond, but I think you got to keep your idea kind of contained, otherwise it's just too much. But it's cool stuff.
Right. But the whole idea is that this is an academic paper. It has 2 research questions. And it's there's a methodical aspect to this.
But it leads to all kinds of tangents. Oh my God. I mean, you got to be careful of those, but yeah. Once you take one thing I found in business, once you have a problem, you figure out a solution, and that gives you a different viewpoint to see another opportunity a lot of times. So as you get out of ways doing this, you may have some problem or issue, but that will lead you to a bigger and a better solution.
What my real deep problem here, and this is years away, right? This is the reason why I'm doing the whole artificial intelligence hypercube thing and virtual reality. I want to build an AI system that's using this methodology, because it's the most similar, if not one for one, to the way we really think, the way we're really built neurologically. What I really want is an AI where I pull this out and I pull this out, and I want to learn faster. I don't want the AI. I, Paul Cottrell, want to learn faster. How do I use these technologies to bridge the gap of why we learn so slowly? So if I can build these different cognitive architectures that that can help me learn, to help me absorb information quicker, then I'll be able to do more. So this is where transhumanism starts to come in. This is the idea of the positive aspects to artificial intelligence. How do we? I don't believe that artificial intelligence is going to supplant humans. I think it's actually going to augment humans. So what I really want is a system that's like this, that actually augments me so I can build this in my head.
You need a Wi-Fi connection.
That's really sci-fi thing, what I'm saying. But I mean, the idea
But it's
is
not that far off.
somehow I want to, I need a feed from my brain to this.
And
If I can get my brain to this, then I'm seeding this. And then I need this to come back somehow, some loop back to me.
So potentially you could stick your brain into the SDR, or at least have visibility of it, and see where it's tripping up, and say, oh, you should divide here instead of multiply.
I can do with a brain scan, like an EEG of my own brain.
You see the active areas.
You can map something similar to this, right? While I'm trading, let's say while I'm trading, I'm reading my brain waves, all right? And I have functions that read certain channels of those brain waves, and it's mapping my emotional state, all right? So what I have done is I've taken nodes that are on my head, reading those channels and bringing them into the neurotransmitter. And I already have functions to map to certain emotions. So based on those brainwaves, it maps to the 4 or 5 emotional states and seeds the SDR through my own brainwave, not the AI brainwave. The problem comes in is that how do I get this SDR back into my head? Maybe it doesn't need to, I don't know, but I really want to augment me with this. I think it's through this method here, using VR. But I don't know enough about neuroscience and how to get the two together. But I'm a firm believer that this is the start. These are the starts. This is the start of transhumanism.
You need a language where you can talk that's not code so much. Yeah. I mean, you built this in code, but if it could do like a virtual reality and you can turn your head around and see the terrain that it's putting out at you in a calm setting, it may look like a brook and trees and sunny skies and stuff like that. And other times it may be rainy or different weather conditions. I don't know. Just a need a way to chunk the data so that it's absorbed faster.
Right. But think about it. It took me almost 5 years to get a PhD. What if I can build something that has this sort of thing, maybe upgraded somehow, where I could do a PhD every year, or I can do the same level of intensity, a PhD in a weekend. Right, exactly.
Well, hard.
We can do that, but we just have to build the tools to do it.
There's other things you get in school too, but besides the raw knowledge, interacting with other people and so on and so forth. There's learning that's not officially learning, but you probably got as you went along.
Right.
You learned not to park your car here because
Did you see Lawnmower Man?
Which one?
Lawnmower Man. This was back in the
No, I guess I didn't get that one.
it's like Stephen King. I think it was based on a Stephen King movie, book, and then it was turned into a movie. But it was basically about virtual reality, and this guy took somewhat of a dumb person and pumped them up with a bunch of neurochemicals, put them in the VR world to learn, to get them smarter. The person became smarter, but became so smart that he actually became a machine and was able to control anything electronic through his mind. So it's, a sci-fi kind of thing. But the thing is, it was kind of the beginning, at least that was the first movie I remember where, and I didn't even have a term at the time, but that's the beginnings of this idea of transhumanism. The idea that, we are confined to a certain baud rate because of the way we process text, the way we read, the way we hear, the way we see.
But it's like we have a very wide bus. We take in data on all kinds of, not 64, or whatever channels, but so in a way the human is wide, I think.
Right.
I don't know if that makes sense.
And it's part of our adaptability, our ability to adapt. The problem is, the problems that I'm dealing with, the amount of information that's coming out of academia and even in group settings like this, it's huge. There's tons of data that's being processed, being published, and
it's exponential. They have curves.
And it's growing exponentially. So any person that has, let's say, gotten a PhD in a certain field, 5 years later, there are 10 subfields within their dissertation. And then another 10 years, there's probably 150 of specialty. All right. So there, how do you absorb this knowledge? The only way to absorb knowledge is to use AI, because our brains aren't going to evolve any faster than what nature allows us. So the only way to speed up our baud rate for learning is using AI. So being able to build cognitive architectures that are somewhat analogous to ourselves, aka emotional states, right? It gets closer to the big problem of how do you augment intelligence? How do you augment cognition?
Well, we could add a math chip to people just so they can do plus minus times divide. That's not that far off. This is like 3 or 4 or 5 steps beyond that.
Yeah.
You need some way to connect directly to the brain to be able to get a transmit in and out. And I think there are some things like that. The cochlear.
There's some chips that are for Parkinson's.
And for vision, they have the cochlear implants.
There are some for. I've seen it for hearing and for vision and for Parkinson's. But that's an early stage. But maybe that's what it is. Is that it had, for us to really get this in our head, it has to be some sort of, electro.
What if you wore a suit that
thing?
If you wore a full suit that would tingle you at specific points all over your body in certain patterns to transmit data?
Well, there's someone on, I believe it was a TED Talk, that has come out with a suit that teaches. It has a pattern, and it has these sensors in the suit, and they gave it to someone that was deaf, and they learned through the vibrations of the suit how to communicate. The suit would read, the suit could hear
And
what
vibrate.
It would vibrate at certain points, and the person that was deaf knew what word they were saying through that vibration. So
Wow.
communicate.
So that's a step to this.
Yeah,
To
yeah.
connecting this.
And this is happening now. This is what people are doing now. This is not
Yeah.
like, project or anything. I mean, this is this is something working now. So, but I don't know. I mean, I think textual maybe a little bit too,
Granular.
yeah, I don't know. I don't think it's the right visual.
Clunky.
When we try to learn, I learn better when I see something, not when I hear it. But that might be just me. I don't know.
Well, there's visual, auditory, and kinesthetic people. There's some others too, but if you go through college, you're very likely to be highly visual because you got to read all this, you got to write papers, you got to see big pictures, so on and so forth.
Yeah, I'm a visual person.
But in kindergarten, they're all kinesthetic,
Yeah.
and then high school becomes auditory. Teacher talks, you listen. And so it's kind of a progression through kinesthetic to auditory to visual, and visual gives the most data the fastest.
So something, probably without wiring your brain physically to an SDR, SDR somehow has to be visual.
Could be on a screen or a wraparound screen.
That's why I think that mapping it into a VR world, or at least an augmented reality world, is the
Interface.
and probably the nearer term solution for augmented cognition.
But if you get to the point where you can just plug in the USB port on your forehead,
Right.
there-
Right. But we're probably a little ways from that. But we could see the AI with our own brainwave. That is not that hard. That's actually pretty easy. The hard part is once the SDR is seated, how do you feed it back to yourself?
I think it's go
the
visual.
only way that I know is you have to be in a VR world to do it. But because it's visual, but I think of things visually, but that's not really the right way to do it. The right way is to actually plug it right into your neural network physically.
And that way you don't even, in the VR world, sometimes they have it where the guy's got his hand there and he pushes it to the side and he lifts this other thing and he pulls that and affects the VR world. If you can shortcut that where you don't even have to move your physical hands and get the same results, then you add speed. I'm not sure if absolute speed is the real goal or depth of understanding.
I would pick depth of understanding over speed.
But if you have speed, you can cover more territory.
Yeah, but assuming that depth of understanding doesn't take, 3 centuries. There's a sweet spot there, between speed and depth of understanding.
Well, if you get the speed up, then you cover more territory and then you get more depth. So speed is still a goal to get to depth.
Well, they did some tests. Neuroscientists did some tests where people are running in a forest, and that's where there's a lot of trees, right? So you have to be careful that you don't hit a branch or hit a tree or whatever, right?
Catch your foot.
Right.
Yeah.
So you're in this almost like survival mode kind of thing. You're moving fast. You're processing a lot of data through your senses, through your eyes. You won't remember any of it.
Yeah, everything that's past, don't need it anymore. I just need what's in front of me.
Yeah.
What's in front of me? What's in front of me? Bam! I hit the ground. Oops.
Right.
But
Right.
but yeah, the old data, it's short-lived. Doesn't you don't need to know what was right behind you unless you're being chased by a bear. If you add a bear to the scene, then it gets a little more complicated. But
Right. So, yeah, it's we need to talk some more. If you can send me your contact information, I can send you emails and
okay,
are you on LinkedIn or no?
I am.
Okay.
Just type it up in the chat box, Steve, so he can get it, and then you don't have to see. It won't get put on YouTube.
Okay.
Just to be real safe.
So, Brian, probably been doing this for what, 2 hours now? 2.5 hours?
2 hours, 15 minutes, and 30 seconds.
All right. So, does anyone else have any questions? I know I said Shalom. No.
Yeah, Rennie's online. I had a question for you.
Okay.
Similar to DNA sequencing, synthesis, reading, writing, available now. We need neural sequencing synthesis equivalent to rewrite the brain.
So you could potentially you could consume a food product that has data in it.
Right. You're right. And you know what? I think when we evolve to like post-human, that's probably what's going to happen. We're not going to eat. We're not going to eat food. We'll eat data.
I ate algebra. Well, got a little indigestion.
Right.
Well, it's funny, but with technology and all the stuff that's available to us now, you're at this edge, and there's other people at other edges, and as they overlap and mix and match, I just see that we live in science fiction. You can read a science fiction book and then set out to do it, and the timing is right.
Well, there's a lot of people are saying that there's not much left in science fiction. That we're kind of living.
Yeah.
What has been written for science fiction or portrayed in movies, is not that far from reality.
Transporters.
I mean, yeah. We already are playing around with atomic transporters. With
And replicators in the 3D printers.
Right.
I mean,
You got George. Right. I mean, some of these 3D printers even print food now. They got.
Well, if we had data in there, we could eat our data.
Yeah.
Johnny, eat your math today. Learn your pluses and minuses.
Right.
You don't get ice cream until after that.
But I'll tell you, I think the way. I don't believe we live in a matrix. I don't believe that. Some people think that we live in a computer simulation. I think we live in reality, whatever reality is.
Most of us.
Well, what I do think in the Matrix is the idea of you download a particular thing. What do you want to learn? You want to learn Kung Fu? You can learn Kung Fu in 10 minutes. You want to learn, physics? You can do that too. So the idea of being able to not just speed read through knowledge, but to have the understanding and wisdom of it too. I don't think that's that far off, but it's.
Is it a good thing though, too? The next thing you got to ask is, if we move there, is it even a good thing to do? Is it good for us? Are we, if we could be all powerful, is that really? I think some people are not suitable for that.
Well, I mean, it's a debate on, are we moving, evolutionary, are we moving to the point where we're going to not need the bodies we have?
Well, our human evolution is very slow, but now that we can manage carbon and silicon and those, then we can affect our own evolution.
Exactly. And we become post-human. There's a certain point where you become so non-human that your beyond human. You're post-human.
Well, that's a good thing.
Humanism, you have humanism like what we're living in now. Transhumanism, based on what we were talking about, how do you hook this up to us? And then post-human would be you don't even need the body. You have something else. You live in the cloud. You are the cloud. We become almost celestial.
Like a lot of sci-fi movies. I mean, there's a lot of examples of that.
Yeah. So I'm curious to know if Shalom, has been online for a while. I wasn't sure or not.
Let me just see.
I was on and off. I had things to do, but I'm back now.
So from what you've seen, what's your take on it?
On the post-humanism or transcending biology?
No. We'll go back to a little bit more earthly thing about new cognitive architectures for training.
Yeah, I mean, I took a look at your PDF and I was listening on and off. So, I mean, it's interesting. The thing is, you have like basically you have discrete states that you kind of boil it down to, right? Like you have those 4 or 5 states of emotions right now.
Yeah.
But actually, there's many more states of emotion. There's between fear and being fearful and being happy. There's lots of different transition states in between that as well.
Right.
So which is harder to model, but in a market, that's why some people like to keep a historical database of patterns. So every wave pattern, right, when they do that nonlinear curve fitting, is like an emotion. Like the way the price wave looks is an emotion. It's an emotional state of the market, but they don't know what emotion to map it to because there's too many of them. So they just quantify it some other way, but it really is a type of emotion. It's just it's hard for us to understand exactly where it is on the spectrum.
Right, and so that's what I'm working with a neuroscientist on this paper. So based on his research, the idea is that the emotional states are determined based on what we call the neurotransmitter associations. And the neurotransmitter associations are fear, trauma, surprise, stay, change, hope, danger, and something else. Oh, protect. So these are the main brain waves of the AI, right? Or the main
this method of
component of what makes up an emotional state. So we'll have the AI show a picture of what state it's in.
Yeah.
Right? We can drill down at any point, because it's stored in the SDR, what its brainwave was to make up that particular emotional state.
It's interesting. There's a theory that there's only one real state that motivates us, and that's fear. It's different levels of fear, and then they just categorize greed as a different type of fear. It's a fear of losing, of missing out, of losing profit.
Yeah.
So everything really boils down to what degree of fear.
But I think with and this is where it's the alignment of nomenclature that's important.
Right.
In our sense of the AI is something that it has seen, something that it has not seen before and doesn't know what to do.
I mean, I think the real test of this
As a human being, I think we use it in a different form.
Yeah.
So we're trying to use human terms. Obviously we're anthropomorphizing this AI, right?
Mm-hmm.
But we're trying to map our emotions and what makes up those emotions into the AI to try to define its behavior. The overall idea here is what's the behavior of the AI? What tools do I need to design?
Well, the behavior
of the AI.
Right. The behavior is a little bit different than the emotion, right? There's the emotion, and then the reaction to the emotion is the behavior, right?
In our paper here, the behavior is the bicellular hold.
Right.
That's the behavior.
And that it's very hard to be able to figure out from the emotion what the reaction is going to be, because there's all kinds of other considerations. For example, people would say if there's a massive sell-off, people are fearful of holding on to stocks. But if they're buying stocks like crazy, they're not fearful, but they could be fearful of inflation, and that's why they're buying stocks like crazy, right? So it's also fear-driven. It's fear-driven buying, right?
Right. But you know, the thing is that's why you need multiple associations, because that is fuzzy logic that's going on.
So you can't just say if a fear level is very high, you can't say from that the behavior is going to be there'll be a crash and people will dump stocks.
Oh, right? No, absolutely not.
Right.
No, right. One association cannot dictate what you should do.
So how would you use this model? How would you know from this this model that you're developing when a crash is more likely to happen?
Fear would go up.
Fear.
Right, but we just said fear isn't enough to detect a crash.
No. Let's go back one here. What we're really doing in this SDR is we're storing the profit, the algorithmic data, if it was used, because there's going to be times where the SDR stops using algorithmic data. But let's just say it's algorithmic data, the profit or loss, the actual behavior, which is the sell, buy, or hold, the neurotransmitter associations, the actual mapping of the emotional state, and I'm missing something. Hold on, what am I missing? Behavior. Oh, the timestamp. The actual time that it that actual slice of time. That pattern of all that data.
Yeah. So it's
what we're trying to look for. The market data, when it's coming in, we're recognizing, oh, did we recognize that pattern before? What's our emotional state now? What's our neurotransmitter state that makes up our emotional state? All right, and what was the behavior that we did to make a profitable trade? Are those in line with a certain statistical range, a certain statistical band? If it is, then copy the behavior and see what happens. Sometimes it may be different. Sometimes it may not be. But statistically, what's going to happen with the way this SDR works is that if it recognizes a pattern with high confidence, there's a high confidence probability that your behavior will map with a positive association. That's the crux of this whole SDR. Now, we get to the emotions. What's interesting about the emotions here is I can go from low, I can go from bottom up, but I can't go from top down. Meaning, I can know this. I can know all this stuff to build the emotional state. All these associations will make a certain emotional state, but I can't go from emotional state to the associations with any high level of confidence of what those variables, what the actual value is, because it's fuzzy logic. I could be in calm, and it could be any one of these values, right? So I can go. I can't go from calm state and know for sure what the neurotransmitters were at any given moment in time. The only way I would know of what the emotional state was at time X would be to reference the SDR and be able to drill down and say what made that emotional state. So what makes the my point is that what's making the emotional state is that we're building up bottom up. There's underlying data, there's underlying reasons for the emotional state. We're not just arbitrarily just saying, oh, the market is going up and it's happy. It's not. It's not that simple. It's much deeper. We're building. We have multiple sets of values, and a different weighting system that is taking the bottom data and building up the actual emotional state.
Mhm.
So
It also seems like if you're calm and then a jolt of fear comes, you're instantly into fear. But if you're fear and you have a jolt of calm, you're still pretty much stuck in
you
fear.
see here that the fear was actually lower than the trauma. So something happened in the AI. You know, I'm just building this tool, so I mean, you know, I'm learning as I'm going and how to read the damn thing. But there are patterns where you have high fear, low trauma, and vice versa. So there are two
It could be
different.
very interesting. I think you'll have to do a lot of statistical testing on it, obviously.
Well, what's happening here? What you're seeing here is what we call the proto-brain. The
Right.
proto-brain is what we're using to actually fine-tune the actual associations before we roll it out for the actual study. We're dialing in the sensitivity of fear and trauma.
But how do you read this? Like these charts over here, it's oil. What is the emotion that is associated with oil prices? Is there any
Right. So I have an algorithm, a simple algorithm that says if the previous price was lower than the current price, buy, and do the opposite to sell, or if it's equal, hold.
Okay.
And it's calculating profit or loss based on that really simple, stupid algorithm, right? So, and change it's binary, 1 to 0. So it had to change its behavior. Stay is the inverse of that. So change your behavior. Stay is don't change the behavior.
Mm-hmm.
Hope is an experiment. The neuroscientists that I'm working with, we're using this. I don't really understand hope. So, you know, I disagree with the neuroscientist, but he says that we should have it to understand stay. But I don't understand why we have this now.
Hope is a positive expectation of the future.
Yeah. But my thinking is that we would have seen it in the trauma, fear, and surprise, danger, you know. But he's thinking that that hope is somewhat different than them. I don't know. I'm in disagreement with having hope in there, but maybe it's, you know.
Well, trauma would lead you to have an anti-hope. You have a negative expectation because your trauma, your
I think the
PTSD
idea that hope is going to be actually lagged. There's a lag to it.
it'll be slower.
These are all, the way this is right now, we haven't dialed it in yet, but these are all current price relative to previous price. Some of these might have a five period lag.
Or more.
Or more, right. So that was the experiment that's going on here. So
I would expect your positive emotions to have a longer time to set than your negatives.
yeah. You know, so, and then, so that this is kind of an experiment for lag, you know, the lag of what's going on current to previous. Now, replaying this. So
Could you do
fear is 1 to 99, and it basically is that if it senses if it sees a drawdown of a certain threshold, start spiking up your fear. If you don't see a drawdown, then just go down to 1. Trauma. So this is kind of like sensing that it's seeing a correction in the market relative to your position. Trauma is that it's reached a certain threshold.
drawdown? Is making that threshold come?
Drawdown. Surprise and trauma are kind of somewhat same, but they're different. You know, surprise is positive positive P&L increase, right? Past a certain threshold. So let's say you said, okay, if the trade makes more than 2%, that's your threshold, start spiking up with surprise. Trauma would be the inverse of that. If it went down 2%, start spiking trauma. So because markets are skewed, you're going to have trauma and surprise. Their charts aren't going to be inversely, they're not going to be mirror images of each other. They're going to be skewed and somewhat distorted because the market is asymmetric. So your trauma, when it starts to sell off, is going to be spiking, or should be spiking more than when you're in surprise. So that's the thought process on that. So once all these are made, then they get mapped into the emotional state. They'll take what's the current, whatever the current values are for each of the associations will go into these 4 different emotional buckets to determine if it's scared, sad, happy, or calm. But you could not, there would be no way to be able to say, if you're in calm state, what were your associations? You could only say what the ranges would have been, but you couldn't say with any confidence without drilling down into the SDR what that actual state is. And that is true with human beings. If Steve is happy right now, I couldn't tell you with any precision why he's happy. But if I had a questionnaire and he rated, for these different associations, what his values were, he would give me values that I could build up to prove that he was happy. So that's kind of the power of the reason why we have the neurotransmitter, is to be able to have the underlying data on what really makes the emotion.
I think it might help to do a moving average.
Oh, the market went up. Yeah, I mean, there's an emergence that's coming out of this association. If that makes any sense.
I think it's going to be a huge database to get any type of accuracy with this.
Well, I don't think so, because if you really think about it, we already calculated what the size of the SDR would be. The size of the SDR, I have 99 cells by 20. So each SDR slice is going to be 1,980 data points. Let's just assume one data point, and this is not necessarily 100% accurate, but let's just say that each data point is just one byte. But some of these data points are going to be integers, some of them are going to be floaters, and because of that, the data set's going to be a little bit bigger.
You have different emotions at different frequencies, right? So at different time scales, right? Because you could have competing emotions, but at different time scales.
Well, yeah. Well, when you were gone, you probably didn't hear about our schizophrenia, versus non-schizophrenic AI.
Well, the market is mostly schizophrenic, so.
well, right now it's schizophrenic because
most of the time it seems to be. It doesn't really know if it's going or coming.
What you see here?
No, I'm talking about the market in general, just market action.
Honestly, no. I think once you dial it in, you'll be able to see I think that the market is actually in a more calm state during all the movement than you would expect.
Well,
Range would be calm. Breakout would be not calm.
Well, that's right, and that's very similar to and that's why we used. Steve's on the right track here, because that's the reason why we said let's use the Levy process. The Levy process is the jump fee. So with this, we're kind of testing to see if we see extreme spikes in surprise or extreme spikes in trauma during those jumps. So, there's a method to the madness here. But in terms of the data,
Well, what about duration? How do you predict how long a state or an emotion is going to last?
Um, I'm just well, there's two methods that we're currently thinking about. Read the current state of the AI
Hmm.
based on what the SDR's data is, whatever makes this data in time X, right?
So if you have a pattern database, you'll look historically how long those type of emotional.
Well, there's two, like I said, there's two ways. One, the current slice of the SDR and its emotional state, or a moving average of the actual emotional state. So let's say if you had 10 slices of the SDR and 8 of them were in calm, but 2 of them were in happy, if I did an average, I'd be in calm state. So you'd have an average.
What type of moving average would you use?
Well, I have an experiment with the level, okay, but I'm thinking no more than probably 10 or 20.
10 or 20, yeah. Well, if you're going to use exponential, then you have to figure out how you're going to weight it. If you use simple, you're going to have to figure out still what the optimal duration should be.
This is the same problem as what kind of Garsh model do you use? It's the same issue.
It's sample space selection, yeah.
It's the same issue. This is peanuts compared to the other problems that I have. But the size of the database, I disagree with you. I don't think this database is that big because it's only 99 by 20, and you got to remember, I'm only using one asset. So, it's only roughly 2,000 data points for each slice.
But you're assuming that that's going to be enough data points for you to do an accurate prediction, right?
Yeah.
Okay.
Yeah. Yeah.
But that has to be tested out. You'll test it and you'll see what you have.
Well, I mean, if you stayed online and watched my beautiful presentation, you'd see that I have a research question,
All right, you gave me enough of a guilt trip here.
And then, yeah. And then, are you in a sad state right now?
No, I'm not at all. I'm actually in a very happy state.
So, and then, I have my hypotheses, here, and then I have my variables for independent and dependent. I have my methodologies, how I'm testing it. I'm using it two-way ANOVA. And this is using some, higher end statistics to be able to prove this all out.
Right. It looks like you're using the same statistical testing method you used for your PhD.
Actually, I am.
Yeah. It looks to be exactly the same, but that would make sense because if you're comfortable with those tools and they work for you, you want to use them.
Yeah. No, I'm using the same method. I'm using the statistical method.
It's definitely a very ambitious project to be undertaking, for sure.
Well, this is going to be presented in the next General Artificial Intelligence Conference next year.
Oh, wow. Where is that held?
In Hong Kong.
Okay, wow.
No, I'm playing with the big boys.
Yeah.
This is going up against the open cog that I've been playing around with.
Mm-hmm.
See, the thing with open cog is it doesn't use emotional states. Well, ours does.
Right. When do you think you'll have some metrics to see how it actually performs? Well, you're gonna have that before the conference, right? I assume.
Well, yeah, of course. But,
so I guess maybe you could do another presentation when you have those metrics. It would be really interesting to see.
I'll drip feed, the different progresses that take place with Brian, and I'll do some more webinars.
Yeah.
But this is just a proto brain before we do the dialing in of the associations. Then when we do the dialing of the associations, I'll do another one. Then we'll, once we have the proto brain done, then we'll start testing each one of these algorithmic boxes to see which one performs the best.
Wow.
For which market? Because we're testing, 5 different markets.
But these, could you go back to those boxes?
Yeah.
You're testing them against each other as like different methods for trading?
Yeah, where each cognitive architecture has one of these algorithms. So we're testing 10 cognitive architectures.
Mm-hmm. I'm just wondering if they're all mutually exclusive. Like, artificial neural networks and decision tree. I would agree with you. It's AI or machine learning versus machine reasoning. But Bayesian is something that you probably use for both. You use that in your forest learning, and you would also use that in your neural networks, I would think, right?
Yeah, but I mean, you can have an algorithm that's different enough. You gotta remember when we do the paper, when we submit the paper.
So you're saying the Bayesian networks is pure Bayesian. Artificial neural networks includes Bayesian, but it's got a lot of other stuff as well. I see. I got it. So in other words, these aren't mutually exclusive, but there are different strategies, and some of them incorporate features of the other ones.
Right.
Okay.
Right.
Interesting. So the clustering one is just a classification. It's like a unsupervised machine learning type of thing. Just classify. And with principal component analysis, how do you use that as just a trading methodology? Just use PCA for trading. I've never heard of that before.
Well, I don't have that coded yet. It will be coded, but we're going to use that as the backbone for an algorithm.
So there'll be other stuff, but PCA will be like the main thing in there. So, and then there'll be other stuff as well. Okay.
What at least in neuroscience, they're using PCA to map multi-dimensions to a lower dimension.
I think what would be more helpful is when you have these things coded up and tested, is people are going to ask, well, what other things are included in the PCA? Because the PCA will have other components as well. Oh.
Yeah, but that would be that's actually in the paper though.
Okay.
Because in the paper, it's not going to just say, oh, we use the Levy process. It's going to have like 3 pages on what's in it.
Right. Okay.
So I mean, so it can be all, proved out through peer review. I mean, we are not publishing a paper that just says we just used the Levy process and this is what the statistics show.
You're going to test all the
published. I mean, it has to.
Sorry, go ahead.
That each one of these would have details of what's in it.
Right. So they're going to be tested against the same data with the same output metrics, and then you're going to compare metric to metric.
Yep.
And then see which one.
Exactly.
Yeah.
And that is the only way to statistically prove with a 95% confidence interval that one architecture is better than another architecture for a particular market.
Right.
And it's possible that if the null hypothesis is true, then none of them work. It's possible. I don't think it's going to happen, but it's possible that none of these work.
Well, that would mean that none of them work in the way that you've coded it up. I mean, everyone has.
So I mean, maybe what happens. I don't think it's going to happen, but maybe what happens is that there is no statistical difference between any of them.
Mm-hmm.
And then the next question is, if there's no statistical difference between any of them, can you profitably use any of them? And the answer could be yes or no, depending on how the SDR learns.
Right.
If the SDR is not learning, then it's not usable for trading. If it is learning, then it is usable for trading, and that it doesn't matter what your algorithm is, which is something, I don't know if you heard a conversation when I was talking to Steve and Brian. I think you can put something in here that's really stupid, like just roll the dice.
Yeah.
And the SDR will learn that it's just the roll of the dice and not to pay attention to it.
Mm-hmm.
And then what's going to happen is that it will start learning a pattern independent of the algorithm. So it's possible that the null hypothesis actually is tested to be true, but it's usable for trading.
Does the SDR have a toolbox that it can pick up and do different things, like pick up a moving average and apply that, or Bollinger Band, or all that other stuff?
We don't have an intent to have anything that's parsing the SDR in that way. But I don't see anything wrong with doing that. That, in a way, that could be just a more advanced algorithm. It's almost like a feedback between the two. It's going back and forth, back and forth, back and forth.
Well, potentially, I don't know how doable this is, but the SDR could draw from the other 10 and say,
Well, that's where you have the social learning test. Because I have two research questions. One, can a larger kind of architecture develop better pattern recognition, recognition in financial markets through social learning methods? So it's not just testing 10. The first test is just the 10 to see which kind of architecture performs the best in which market. Then we do the social learning. And what it does is it's saying, well, which one out of you guys is the best? And if I take the top 3 or top 4 and see the SDR with your patterns, can I do better? By, now this SDR is going to be bigger, probably, than this calculation here. Probably going to be 10 times bigger. Because it's going to be an aggregate of all the 10, SDRs. So this is probably going to be 99 by 20 by 10. So I'm probably going to have 20,000 data points per SDR for the social learning test. But still, that's still small. You're only talking about 50 meg. So,
can you have something like a zigzag indicator that tells you, on this market, I would like to have gone long, short, short, long, short, or whatever the pattern is, and then how close did each of the ones get to the optimal? I don't know if that even applies.
No, you could do that. I mean, you can make an algorithm where once this SDR is seeded, you could have it where before it does another trade, it parses the SDR and kind of like reads it like a book. Say, well, I'm thinking of this idea. What if I read you like a book and say, well, I got a new idea. I see, I see maybe every third slice, certain cells are on. There's something special about every third slice. Well, maybe mimic the same behavior every third slice or something. This particular task isn't getting that fancy, but you can get as fancy as you want with how you want to data mine the SDR. But for this research study, you don't need. I need something that's more quick and dirty, just to prove the point that this could be an AI architecture using emotion, and that proving out if certain algorithms in this type of architecture work for trading. So what do you think, Shalom? Did that convince you?
Shalom?
I think he's running scared.
No, he's still online.
I'm still here. I'm not going anywhere. I disagree with you on the data points. I do believe you'll need a lot more data to test this thoroughly and get the accuracy that you want.
Hey, tell me what am I doing wrong through the methodological method here? How
the methodological method it's fine. I mean, you're going to test it, and then you're going to see, okay, I don't have enough data. I'm going to have to add more data and more data. You're going to find out as you do the testing that you need a lot more data than you thought you did initially. That's what I think. But I could be wrong, but from my experience, that's what my experience tells me. Because 1,980 data points, especially if you're testing multiple systems on it. I mean, you were at the Trading System Labs webinar, right, a few days ago, right?
Yeah.
Yeah. So that guy had 1.2 million systems that he generated with GP, and he was testing it on 8,100 points. 10% was taken out for out of sample, so his in sample data was the same. It's just about 7,200 rows or 7,200 prices.
Right.
Right. He's got 1.2 million systems. I mean, you know.
This is not this. It's this right here though is more in line with what he's testing. My data points, my total data points is 5 million.
Right.
And that's just one cognitive architecture. It's
Yeah.
going to be 50 million when I do the social learning.
Okay.
It's
50 million.
that the SDR's individual slice
Right.
is like a picture. It's like a picture of a movie.
Mm-hmm.
All right. The movie makes no sense really, just looking at one slice. But if I put them together and show it to you in 60 frames, you understand a little bit more about what's going on. Each frame, 2,000.
If you say 50 million total data points, that sounds like it's more like in the ballpark. That sounds reasonable.
Well, that's what I'm saying. This is the total. That's what I have about 50 million here total data points in the SDR.
Okay.
So I think what's the magic about this is that the SDR doesn't have to be that big. I mean, I was originally thinking the SDR had to be a terabyte. Nah, you might have a terabyte of data coming in, but a lot of that data you're throwing out because you don't need it. This cognitive architecture is filtering out what is needed.
Okay.
You have terabyte of data coming in. And when everything's said and done, you have about 50 or 60 meg worth of data.
Mm-hmm. That's the filtered out data from whatever you had before the terabyte. Okay, I mean, I'd love to see the results. You know, when you have the metrics, it'll definitely be a more interesting discussion then.
I think, to my knowledge, this is going to be the most comprehensive artificial intelligence trading algorithm study that has ever been published. I cannot find one trading AI system that has this level of detail.
Right. So is this a system you're going to present it and then you're going to package it up and sell it, or?
Well, what's going to happen is if you were here for the webinar.
You know what? I'll catch it on the replay. Hopefully. So not have to ask you to repeat anything.
No. I don't mind. So the Poseidon is currently this, the snapshot stack.
Right.
All right. This has a problem. The problem is that it can make some money, but there's not enough feedback looping in this to actually be learning.
Right. It's not dynamic.
I'm not storing a lot of values here. I'm only storing, for every time period, I'm only storing 1, 2, 3, 4, 5, 6 penalties. So it's not as robust. And what I've been seeing with this, through the trial and error method, is what you were saying. The SDR isn't big enough. Totally agree.
Yeah.
So, but there was also something else missing here. So I bumped into a neuroscientist, and I said, you know what? I need feedback and emotion. And I need a better SDR. So I have feedback, I have emotion, I have an SDR system. All right. Now, what's going to happen is that once this paper proves out statistically that certain architectures work in certain markets, Then what I'm going to do is that we're going to take this concept, and then we're going to go and use what is called the fractal brain theory, and we want to build an SDR, that SDR, in virtual reality using a binary tree 3-dimensional object in the VR world. And in the VR world, we're going to be seeding this 3-dimensional SDR, if you want to call it that, these neurons, or whatever, these points, these atom spaces, if you want to use the open cog method, in the VR world, and then use that as the system lighting up to determine if you should be doing something or not. It's getting data into the VR world. It's processing it in its neural network that's in 3D, and it's spitting out, an output.
Mm-hmm.
So the idea is to convert. So you can kind of see the progression of this. This is a really, really rudimentary SDR. This is a much more robust SDR with emotion and a lot more feedback. And this is what is closer to what is the human brain. And I think that because these SDRs aren't that very big for trading, right, I can convert these, even if this thing was 100 times bigger than what is in the paper for production type environments, because you're treating multiple assets at the same time or whatever, even if it's 100 times bigger, I could still get into a VR world with current technology. If it gets to 1,000 or 10,000 times bigger, then I got a problem. But at 100 times bigger than what the paper is saying, I can get it into a VR world.
How long do you think it'll take you to implement this?
To what, the research paper or the next research paper?
Not the research paper, to get the system working, to get it implemented.
Well, this research paper here,
yeah.
Once I'll have the code ready to put it into Poseidon before the conference. Because the code's ready.
Okay.
You know what I mean? The paper will be actually latent to the actual code that would go into Poseidon. Because I'll know before the paper is submitted that does it statistically work or not.
So if the code is ready to go, then you have to work on the
writing the Poseidon.
Right. You have to work on the back test then. That's the next step, right?
Right.
So the implementation, how the back test is implemented, that's going to be, the details of that is going to be a big determining factor.
Well, I mean, the back testing is the paper, though.
Well, I mean, you actually have to write the back tester for the code, and you have to show the metrics and see how it did, right?
Well, isn't that what the paper is? The paper is telling you what.
I didn't see any metrics in the paper. I just saw the framework. The paper has the framework, right?
No, the paper has the framework and the statistics behind.
Okay.
It's going to give you a p-value. I'm going to have a p-value for this one, this one, this one. Each one of these are going to have a p-value.
P-value is nice, but I mean, don't you also need like a P&L, like what the
yeah, I mean, you can show a chart saying what the P&L was, from time 1 to time whatever for this, for that. But what's statistically important is the p-value. But you can show what's going to happen when this is published is it's going to say your test, your t-test, and your Tukey test is going to have the t-test with X amount of degrees of freedom equals blah, blah, blah. That test shows a p-value that's less than 0.05. Therefore, the hypothesis test is true. That statistically, let's just say this is better in the oil market. And then there's going to be right under that, it'll say with with the hypothesis being the alternative hypothesis being true, the P&L showed a blah blah blah. That it was if you started with $10,000, it ended to be $20 million or whatever. But what would pass peer review is that p-value,
Mm-hmm.
and that t and the actual showing of the t-test. That is the definitive answer of if this is working or not. And that's the back test.
Good enough. What say you, Shalom?
I need to think about it a little bit more. It looks like he's going to be using a good sample space. So, when the P&L is published and all that stuff is published, that
don't rely on P&L. It's also the p-test or the p-value. It's P&L and p-value.
Right, P&L and p-value, but the P&L is something that traders.
If anyone just gives you a P&L, they're not doing the statistical analysis correctly. You want to know the t-value, the p-value, and understand what's going on in the statistics. Just showing a P&L, oh, it's positive, great. I mean, that trading system lab, which I think is a decent product. It's a different type of technology. It's an older technology than this, but it's more mature. It's a matured product than what I have. But but you could tell that there were certain issues when it came with the way it fits in the sample size. I mean, you brought it up right away.
Yeah.
Right?
Mm-hmm.
Well, when you just look at the P&L, when you just look at the sample size, it's not enough. You need to dive into the statistics. A lot of traders.
I agree. You need supporting statistics. I mean, most people use like P&L volatility and max drawdown percentage as well.
Value.
I mean, yeah, I agree. Having supporting statistics is necessary. I'm with you on that. So when will you have the P&L published? I guess is what I want to know. Is that also in the paper already, or not yet?
Well, we're still building the proto brain.
Okay.
We build the proto brain and fine tune this.
Mm-hmm.
Then we can get to this.
Right.
So we have to build. We're building the proto brain to fine tune what the functions, what the actual curve fitted functions are for each of these associations.
Here's another question you probably already answered. Sorry about this. What language are you using to code this up?
I'm building this 100% in MATLAB.
Okay.
Woo!
And you're using the parallel toolbox for.
Yep.
Yeah.
Yeah. I have the full thing. The full thing.
Yeah.
Now for the VR world, that's being coded in C#. To get this into the VR world, I'd have to do that in C#. So my VR coding is C# using Unity graphics engine, and and then the bulk of my coding and the bulk of my development is in MATLAB. I'm not a fan of not doing it in MATLAB.
Yeah. And anyways, with MATLAB, you could always port it to another language like C# easily. So, right? So you can do that.
But I go in and out between MATLAB and Unity 3D. And the way it communicates is using C#.
Do you plan to hook this up to some API that hooks you into a broker for like paper trading?
I actually sent I have a form that I have to fill out for for TD Ameritrade.
Okay.
That would actually give me some special access that I can put into Poseidon that actually trades on TD Ameritrade. But it's not, that's not on the, that's not the high priority. The high priority right now is building up this research paper.
Right, obviously the back test comes first, and then like a real-time paper trading test, and after that, it's going to be really interesting. So, if it does well, you may want to just keep it to yourself and just trade off it, not give it to anyone.
Well, like I said, I was telling Steve, the research paper, this is not just about financial trading. This thing is much, much deeper. That objective function can be anything.
Right.
It doesn't have to be finance. It could be missiles, it could be drones, it could be anything.
It's an emotional behavior detection system, basically.
Mm-hmm.
Yeah. How many lines of code do you think it's going to take to code it all up?
I don't think if you want to have all the code together, because I'm going to be copying for each kind of architecture.
Right.
But I don't think it's going to be more than maybe 1,000 or 2,000 lines of code.
Mm-hmm.
Each one. So, let's say 20,000 maybe. If you want to add all the lines of code for all the kind of architectures together, I don't think it's going to be that much. I mean, my ProtoBrain one is just a few hundred lines right now.
Right. Oh, that's pretty cool.
And the beauty of it is that it's simple. The idea is if it's simple and something emerges that we saw, with those charts.
Yeah.
That gets close to reality. There needs to be simplicity, and that if you have something that's simple, then it can emerge out and provide complexity, even though the underlying core of it is simple. That's much more elegant than having this, harebrained, very complicated model.
What do you hope to get out of that presentation you're doing in Hong Kong?
Notoriety in the AI world.
Okay. So that conference gets published on the internet.
This is the artificial intelligence conference.
Okay.
I mean, there isn't one on the planet that's as important as this one. It'd be almost like I guess. I don't know. I don't know a similar conference for finance. Maybe when Warren Buffett does his thing in Omaha. I don't know. But this is an important thing.
One more curious question: the algorithmic box. How much of the code is going to be basically the same between each of these boxes? Because you said you're going to be doing a lot of copy.
Well, the algo box. When I said copy, I meant really each one of these.
Mm-hmm.
This.
Okay.
I think, this whole thing is probably 2,000 line code. The SDR is going to be bigger, but that's just storing data.
Right.
The code is probably only 2,000. This is going to be unique to each of the cognitive architectures. So the code for each of the architectures pertaining to this particular part of it, it's not going to be copied because this is unique. That's the whole point, that it's unique. That's the reason why we're doing the test. One of my categorical independent variables is 10 kinds of architectures that use 10 different algorithms.
Okay, so as long as the algo stuff, there's not going to be any shared code at all. That was my question. So that part's going to be completely unique.
But what is shared code is how this is read in, how the SDR is stored, how the neurotransmitter is mapped and created, how the profit and loss statement is done, how, you know, how the actual behavior code is coded, which is only a few lines. It's not that much. So,
Because we're coming up, well, just over 3 hours.
all right. Well,
Yeah, I'm glad I was able to come back and ask some questions. Thank you, Paul, for answering all. I appreciate it.
well, you know, the whole point is that it needs to go through a peer process at multiple levels. At people that are mathematicians, that are in neuroscience, that are in trading, that are in programming. By going through the peer review process, it will strengthen stuff.
You know, if I were you and you wanted to get some feedback on your back testing, like how valid it is as far as sample space, size, and stuff like that, you might want to reach out. You may not, but you might want to reach out to Marcos Lopez because he's written a bunch of papers on that, and he might have some interesting feedback for you.
Wait, is he part of the Quant Lab group?
He's not part of Brian's group.
No.
He is a researcher and quant trader and developer as well. So you might just want to reach out to him independent of this group, is what I'm saying. You know, just
Okay. I didn't know. I don't know him. So.
yeah. Well, I mean, he has a website, quantresearch.info. You can check out all his papers there. I'm surprised you haven't heard of him. You've never gone to that website?
No.
Oh, you might want to check it out. He's got some very interesting stuff on back testing, sample size selection, and how to detect fraudulent tests. So he has a whole methodology on that. How to do in-sample and out-of-sample testing so that it's more robust. He's got some very good stuff. So quantresearch.info. And if you want, I can point you towards the papers I like, but they're pretty easy to find up there. So.
Okay.
So he's a nice guy. I mean, you could email him, and you know he might have some free time to look over your stuff. And that's really the only suggestion I have as far as reaching out to people.
Okay.
Yeah. I guess, what do you want to do, Paul? You want to make sure people don't go away disappointed, that's for sure.
Well, never disappoint. It's never disappoint. It's always a fun time.
That's why Shalom kept coming back.
That's why I keep coming back for more.
That's
Even though I
right.
keep getting pounded by Brian and Paul, but I'm still here.
That's okay.
I'm just joking. You guys are okay.
The back cat strikes again.
Back. Are you going to use that as your icon, that JPEG I gave you? Is that going to...
Oh, I got better ones.
That one was pretty cool, you have to admit.
Sure.
All right.
So I guess we can wrap it up, I guess.
For sure.
Yeah, thanks a lot. It's really interesting.
Paul, can I put the entire thing on YouTube, or how do you want to do it?
Yeah, go ahead.
Okay, we'll do.
All right.
All right, man. Thanks again for presenting this.
You know,
Yeah, thanks again, Paul. Thanks, Brian, for
Thanks for everyone coming out and being on for 3 hours. All right.
Thanks for having us.
Thanks,
Yeah.
thanks, Steve, for participating as
we'll
well.
talk again.
Okay, sure, anytime.
All right, guys.
Everybody showing up. Appreciate it.
Yeah. Thanks again, Paul.
Okay, bye-bye.
Talk to you guys later. Have a good night.